This video describes the language of Focus 15 investing. I developed the language to describe the current level of resilience in a market in a simple way. As you may recall, we look at three main market resilience indexes: the macro, measuring the longer-term trends that last several years; the exceptional macro, which shows when the longer-term market resilience index may turn positive; and then the micro MRI, which shows the bursts of resilience that take place a couple of times a year. The MRI ratings are based on a few ideas. The MRI are additive. They reinforce each other when they're moving in the same direction, and they negate each other when they're moving in opposing directions. The ascending leg of the cycle is important, and it's counted and described as positive or being present. So that means that when the macro MRI is trending positive, we say that that is present or positive. When the exceptional macro occurs, that is a positive influence. And in the up legs of these microcycles, that's when they are positive or present. That's when they're providing resilience to the market. And so we have measures of very long-term resilience, the exceptional macro, which foreshadows a trough in the macro MRI, and the bursts of resilience in the micro MRI. I have a rating scheme, and that measures the number of positive MRI across these three different resilience indexes. The rating includes only the positive legs of the cycles, and the scale is from 0 to 3, with 3 being the highest resilience. So in this case, whatever index we're looking at, the macro is positive and the exceptional macro is not present, and we're not experiencing an up leg in the microcycle. Now this rating is 1, and a rating of 0 to 1 is avoid, and a rating of 2 to 3 is favor. I describe those ratings from time to time in the commentary. To describe the levels of the micro and macro MRI, I sometimes describe the percentile levels. And so if we picture this cycle going back 100 years for the Dow Jones Industrial Average, there are cycles that move up and down. If I indicate that the current level is at the 90th percentile, you'll have an idea that it's very close to the top of its normal range, and it could be on the ascending leg where it's present, or the negative. A percentile rating of 10 indicates that it's somewhere down here, and of course it could be here just prior to the trough, but it's at a very low level. And if these cycles continue, if something is at the 10th percentile, it certainly has room to move higher and push prices higher. If something is at the 90th percentile, an inflection point is likely to occur. Now remember, the exceptional macro is either present or not, so there's no percentile rating for the exceptional macro. The market resilience indexes provide weekly indicators of the current market resilience, and when the market is resilient, it can recover quickly from negative news, and when it's vulnerable, it will recover slowly and in an incomplete fashion to negative news. And based on that, the rotation strategy, the asset class rotation, favors a market's resilient periods and avoids it during its vulnerable periods. Thank you very much, and that wraps up the discussion of the Focus 15 language.